Hey everyone, it's Alissa Coram here. Now, we often talk about the personality traits that you do not want to have as an investor: to be greedy, fearful, to have hope that blinds your decision-making process, and pride. But we don't talk often about the personality traits that make a successful investor, like humility, passion, discipline, and patience. So today I'm talking with David Ryan. He's a three-time US investing champion, longtime portfolio manager under IBD founder Bill O'Neill, as well as decades of experience as a hedge fund manager and mutual fund manager, about the personality traits of a successful investor. Let's do this. All right, David. So you've been through plenty of market cycles, and with that, have had to learn how to perfect your process along the way. And just as much as investing is analyzing the numbers, crunching the numbers, making all of those decisions, it's equally as important to have that mental game down and have the personality of a successful investor.
Well, the first characteristic, and I think just about one of the most important, is humility, because you need humility to be able to learn almost anything, because you have to admit, I don't know everything, and you also have to admit that you make mistakes in the market. You have to be able to identify, okay, I'm down on the stock, it's hit my stop, I've got to go ahead and sell it. But if you're not humble and you start fighting with the market, that's when you can start making all sorts of mistakes and start losing a lot of a lot of money in the market. And so a great saying that I keep in the back of my mind is that it says, when pride comes, then comes disgrace, but with humility comes wisdom. And so you want to be constantly learning in the market and keep your mind open for the next idea, or the next rule that you've got to adopt to help your performance.
Yeah, you're so right. I think there's this human desire to always want to be right. And so that's forcing the situation with investing. Well, I'm going to be right. I'm going to eventually be right, even if a stock is going against me. But what I think you and other great traders do so well, it's not about the number of times that you are right. It's about, when you're wrong, realizing that quickly.
Yes, yeah, one of the hardest things to do, and the hardest things for people to do, is to admit a mistake. And so, I've always said, one of the best things that you can do is to go back, maybe every 6 months or once a year, go back and line up all your trades and see where you made your money, especially where you lost your money, and start looking at the charts and trying to figure out why you made a mistake, why you lost money in this situation. And so you have to admit you're wrong, then you have to study why you're wrong, and then you have to learn from it and move on. And to me, a loss is not a loss unless you don't learn from it. If you learn from it, then you're actually paying money to help improve your performance.
Yeah, and doing that post-analysis was one thing that really unlocked the next level for you in your trading career and your performance, right?
Yeah, and that was all the way back in 1982 when I actually joined William O'Neill and Company. I had an account, and it was about $30,000, and my timing was great in joining the company because a huge bull market started in August of 1982. And I doubled the size of my account and went up to $60,000 in about 9 months to a year. But then 1983 to 1984 comes along, and I start getting chopped up all over the place. And I lost everything I had gained, all the way back into I think it was $16,000 my account went down to. And I got so frustrated, so upset, that I spent an entire weekend looking at every single stock I bought, and especially the one and bought and sold, and the ones I lost money on. And what I found is that I was buying stocks that were too extended. And so I said, okay, that's it. I am only buying stocks that are just breaking out, and I don't care what anything else looks like. This is the only setup I'm looking for. And that's where my performance really started turning around.
Yeah, so that humility is huge, but it doesn't just take that to be a great investor. This is not easy. It takes a lot of hard work.
Yeah, and that's where that's where the passion comes along. I bought my first stock when I was 13 through a custodial account, and my dad was talking about stocks from time to time, and so I found a passion at an early age, and what's so important about having the passion is that you'll continue to work hard, and to me it's not work. I'm so interested in it that I do it I don't want to say all the time, but I'm always thinking about where's my next idea going to come from. And that also gets you through the very, very tough times, because we've had some great bull markets over the last 10 years, but maybe now we're getting into a more difficult period. But if you're passionate about it, you're going to study and you're going to be looking for the next idea and using the time when there isn't anything to buy to learn what you did in the last bull market.
Yeah, and I feel like that passion and discipline kind of go hand in hand, because if you have rules that are helping your performance, how could you not be passionate about what you're doing? But one more thing on the passion side, do you feel like there's ever a double-edged sword with that in terms of the types of companies that individual investors might be interested in if they have a personal passion about one industry group, or they have a family history of their family, all of them worked in oil and gas, or some sort of specific edge? Do you think that there might be a double-edged sword with that?
Well, I think that can only help, because if you have a passion about a certain area of the market or the economy, or you work in that business, then you get a great insight long before others also do. And so I think then you can maybe even specialize in buying those stocks, or really concentrating on that group as one of the groups that you buy or you trade in.
Yeah, give you that extra edge there. And I feel like you can't have that passion without the discipline. So talk to us about what discipline really means to you as a successful investor.
Yeah, discipline is so key, because you can have the greatest method in the world. I mean, you could have something that where you 50% of the stocks you buy, do well, or even more than that. But if you don't have discipline to follow the rules, you could have the greatest system in the world and still lose money. So you have to have the discipline to enact those rules. And but you have to ask the question, well, where does discipline come from? And I hate to say it, but discipline usually comes from going through some very, very hard times, or or like I said, when I saw my account drop all the way down, that got me to start moving and realize and learn from the mistakes I made. You have to go through pain and remember that pain so you don't do it again. And another great saying I've read is that they will die for the lack of discipline, led astray by their own great folly. So and once you know what to do, the market is not that hard to figure out. Are we in an uptrend? Are we a downtrend? Is this the leading stock? But it's really you versus you. It's not you versus the market, because you're fighting yourself, wanting to break the rules, and you're constantly battling between the fear and the greed that comes into the market. But what discipline does, it helps defeat or minimize that, and it keeps you on track. And I've said that you should almost be like a robot. I mean, you don't have emotion. You see the information. Does it fit the characteristics you're looking for? And then you move. And then if things change and some of the rules that you have for selling a stock come in, well, you sell it out. So as much as possible, eliminate the emotion, and that's where the discipline is so important.
And that's one of the things that made Bill O'Neill such a great investor, right? He was able to just look at the data that was presented and not have that emotional tie constrain his decision-making process.
Yeah, and well, that's also humility too, because some people get locked into a market call, or they think, oh, we're in a bull market and it's got to keep going. But Bill had the ability to quickly recognize the information that he's seeing in the market, and he would change before just about anybody. I would actually see, when I was working in the institutional department of William O'Neill and Company, I would see salesmen who knew what to say and tell their clients, but they couldn't do it themselves because they were locked into the last bear market, and they couldn't switch. So.
Yeah. And I feel like that actually applies to what we're going through right now. Is after such an incredible market in 2020 and even 2021. Although in 2021, it was required to be a little bit more tactical, easy money in 2020. But you go from that to now we are in a correction, and there's still that mentality of wanting to buy, wanting that, that greed, wanting to make money, but it's not always going to be an easy market.
Right, but that's what the market it does. I've always said that it's one of the greatest training mechanisms. It trains everybody to think a certain way, and you just get. And after so many times the market's pulled back and then moves up, pulls back and moves higher, everybody gets into that routine. But then all of a sudden it pulls back, and then it keeps on pulling back, and everybody gets stuck on the technology. I got to buy technology, but the market has now moved on to more cyclical stocks. So you have to be flexible.
Mm-hmm. And patient too, because again, that easy money in 2020, maybe some millionaires were made in a pretty easy fashion. Stocks only go up. That's what we kept hearing on social media, but it's not always that easy.
No, and I think too many people go into the market thinking I'm going to get rich quickly. And I don't think I've ever had anybody come up to me after a seminar or something, or a talk I've given, and said, I made all my money in 3 stocks in 1 year. Well, yeah, and usually the way you do well is you compound your gains year after year. That's where the big money you come. I mean, you've heard that. If you've heard lots of stories where if you take a penny and you put it on square one on a chessboard, and you double it every new square, that you have, I don't know how many millions of dollars by the time you get to square 32 or so. But that's what it is. You want it to compound gradually over time. Yes, there are times where you're going to have really big years, but you don't want to give it back, and you just want to do it, do it. Don't be in a hurry. I think that's it. And Jesse Livermore, a classic trader back in the 20s and 30s, said, he says, it's not the thinking that makes you money, it's the sitting. And another saying is, wealth gained hastily will dwindle, but whoever gathers little by little will increase it. So don't be in a rush. To be disciplined and accept what the market gives you. And then the last thing about patience is, anytime I talk to college students about in an investments class, I say the first thing that you do when you get out and you start making money is open a Roth IRA. Now, this is the only mechanism in the market, or in the tax structure, where you can actually make money and the government doesn't take it away from you. Now, you're not going to see that money until you're in your 60s, and except for, I guess, medical exemptions or something like that. And you might think you're 20 years old, 60 is so long away, but it's amazing if you can put money in and just compound it on a gradual basis over 40 years, the size that gets to. So. Yeah, the last thing is that when I've seen people who have actually blown up, or hedge funds that went out of business, is that they took too much risk. They were too arrogant about their position, and they took too much risk in 1 or 2 positions, and then it all went bad for them.
Yeah, it's so cool how all of these different personality traits are really interconnected, and it feels like you kind of have to have all of them to be successful. And that Patience also ties back to the discipline and down to the setup level, looking at a trade, waiting for that right spot, not just buying because you're starting to see that momentum and yeah, it checks off some of the things on your list. You're really going to increase your odds if you have that patience to look for those high quality setups.
Yeah, and that's, having that discipline and following the rules is what eliminates, I think you've talked about FOMO, trying to get every move. And now with any, brokerage account, you can almost trade as much as you want. Where in the past you were, you were paying a commission. So you thought once or twice or three times, should I actually take this? So I think can hurt a lot of people if they're over trading. And I think we have to slow down and get discipline and really wait for the setups that will really work out.
Yeah, so that humility, passion, discipline, and patience, so interconnected and so important. And I can't think of a better person to give us the words of wisdom on this topic than you, David.
Well, I think there's a lot more that could go into this, but I mean, we would need another hour of getting into more detail. So.
The Cliff's Notes version
yes.
For everyone out there. Well, thank you so much. It was awesome chatting with you today.
You're welcome.